presentation. Welcome to our webinar presentation here on this Tuesday. This will be a moment to discuss our CFC open call for proposals. My name is Basma Zora Yaqub. I'm the Impact Strategy Officer, and I will be co-presenting today with our COO, Nicholas Kraus. I will start off now, and then Nicholas will be taking over shortly after to discuss primarily the operational part of the work that we do. Great. Before we get started, there are a few technical notes that I would like to discuss. If the broadcast is interrupted, please retry again using the same credentials, and you'll be able to jump in the presentation. If you have any questions, which undoubtedly you will have, we will encourage you to please ask your question during the chat. During the presentation, we will keep everyone on mute. If you're not on mute, please mute yourself for now. There will be a Q&A by the end of about 15 minutes. We will work through all of your questions and also answer them already in the chat in case you have them. There will be ample opportunities to answer these. We will also be recording. So if you have any questions that haven't been answered yet, there are multiple YouTube versions of this particular webinar. So you can re-record and re-look at all of the presentation, etc., etc., etc. And you will also be sent this presentation as well. There will also be an email address in case of further questions. Great, that is the housekeeping for now, and let's get started on our presentation. The Common Fund for Commodities, that's us. Today we will be discussing who we are, what we do, why do we focus on commodities, the open call for proposals, how you can join in on the work that we do, and the application form. So the Common Fund for Commodities at a glance. We are an intergovernmental and financial institution, and we are headquartered here in Amsterdam. Unfortunately, we do not have any regional offices yet, so all our staff is primarily based here in Amsterdam. It's 2024, but we were established in 1989, which is a while back, a few decades ago, and the way we were founded was the combined effort by 101 member countries that sought to found an institution that was going to build the capacity among SMEs. And that's what we've done from 1989 until 2014. In 2014, we changed our strategy from one that builds capacity primarily through grants to one that builds capacity through loans and various other financial instruments. Institutional members that are also part of the CFC are the EU, the African Union, and regional institutions as well. So this brings us to the work that we do. Well, since our founding in 1989, we have financed nearly 500 value chain projects. And the total project cost of this was nearly 800 million. It's quite sizable. As I mentioned before, we pivoted to impact investing in 2014. And some of you may not necessarily be familiar with impact investing and what that means. Impact investing is investing, in this particular case, in SMEs, but we also would like to see a return on investment in terms of the environment and the social performance of, let's say, small farmers, your staff, and other producers that you may have. This is an area that is very important. It's part and parcel of the work that we do, and we will definitely elaborate a bit more at the end of the presentation. So, at the moment, we have nearly 52 million invested in 50 loans and 38 million in committed, and since our founding, we've been active in 99 countries. Why commodities? In our assessment, commodity value chains, agricultural commodity value chains in particular, are commodity value chains that have plenty of value that is created by the end of the value chain. And unfortunately, the producers, the small farmers, etc., may not necessarily be on the receiving end of the value that is created in that value chain. The small farmers in particular are a key demographic of the work that we do. Small farmers in rural areas are more likely to be poor. 80% of the poor people in developing countries are in rural areas and predominantly small farmers. And this is a target audience or a target demographic that we're looking to aid with an increased income that we ideally would like to see alleviated from poverty. And commodity value chains is where the best lever for change is, and therefore this is a value chain that we seek to invest in. As the slide says, commodity dependence is root of poverty for 2 billion people. We seek to transform this value chain towards equity and sustainability. So fair and equitable treatment of small farmers is something that we feel very passionately about here at the Common Fund for Commodities. And this is very much reflected in our vision and our mission. This brings us to the next slide, the way we work. Well, as you can see from the middle of this slide, it's SMEs. Now, why SMEs? Why are SMEs so important that we have to invest in them? In our assessment, when it comes to the financing flows, there are one could say two main financing flows. One is through big institutions in the commodity value chain, and the other one is through microfinance. But however, the middle is missing. And therefore, we see an opportunity here for SMEs to function as the lever for change, particularly when it comes to their relationship to producers, the small farmers that we seek to improve their livelihoods for in a fair and equitable way. What one could think about when it comes to support to SMEs is improving the capacity in marketing and distribution, processing, buying and logistics, etc., etc., etc. The support that we provide really depends on the proposal that comes in and where we see the best impact for every dollar that we invest in terms of the environment and social metrics. One can think of trade finance, which is a majority of our portfolio, but we're also open to CAPEX loans, working capital, and quasi-equity. We are predominantly looking for SMEs that have a clear link to smallholder farmers, as we are seeking to improve the livelihoods of poor rural people and their households. And the way to do that is by linking these smallholder farmers to international markets. And by international markets, we mean high value markets. How can we improve the livelihood with our investment? And hopefully, by the end of the investment, the link will be established and maintained without the investment that we provide. And that's how we go from sustainable finance, to sustainable finance, pardon. So the CFC open call for proposals. What are we looking for? And what is the application process? What we're looking for are primarily agricultural commodity sector proposals. Why? The demand is very high. Technically, we are allowed to invest in other commodity value chains. However, the vast demand for our business comes from the agricultural commodity sector. And here we can think of SMEs, cooperatives, and institutions active in the sector. A very important part of an application is its ability to innovate for positive change. As mentioned prior, the social and environmental aspect of a proposal is very significant in the success of such a proposal. And what one can think of a successful proposal would be agroforestry, climate smart agriculture, renewable energy, food security, etc., etc., etc. Financial viability is also assessed as part of the proposal. And we require financial statements of several years in order to consider a proposal complete and for it to be successful. So these are parts, this part will be further addressed by my colleague Nicholas Kramer, who will follow shortly. The application progress, the process. It starts with the internal screening by the CFC Secretariat. When the application form is finalized and sent to the open call at commonfund.com, we can review it. One of the first steps we do as part of our review is to have a look at our exclusion list. And this is an exclusion list that is available on our website. And I would highly encourage prospective investees to please have a look at the exclusion list to see whether you are, whether funding would be possible in this particular case. Another aspect is we can only invest in member states of the CFC. Unfortunately, there are several countries that are not yet members of our organization, and unfortunately, we are not in a position to invest in said countries, but that might change in the future. Once we have reviewed a proposal based on its financial sustainability, but also its ability to have impact in terms of the livelihoods of small farmers and the environment, we can actually proceed to the next stage, and that is an evaluation by our consultative committee. And a consultative committee is actually an impact advisory committee of experts, 9 experts who meet twice a year. And they will review your proposal on a technical basis. And they have lots of experience in very specific value chains. It's a good batch of various countries and various value chain expertise that they bring along. And based on their approval, it can proceed to the next step. And you will likely receive recommendations in that process as well, and questions that will need to be answered. Good. Once that is done, we can send it to our executive board. Our executive board comprises of our member states, and they will then approve it. Once that approval is done, we can start discussions about the term sheets, due diligence, and hopefully also a contract that can be could be finalized. So there are 2 application processes. We're currently in the April deadline of our application process. The lead time is 6 months. Unfortunately, we're not in a position to answer to every application process. Therefore, if you haven't heard from us in 6 months, you can conclude that your application hasn't been successful yet. But we encourage you to please apply again, and hopefully it will be successful then. During the whole process, the process of 6 months, it's very likely that we will have further collaborations, discussions with you to get the proposal to a state that we can send it to the executive board for it to be approved. So please do keep in mind that there will be further conversations further down the line. So the board will consider it for the lucky few, and they will make a final decision based on the information that is provided. Hopefully the board will approve it, and then it will go for legal consultation. And we would like to see the project / investment active within 12 months. We do have the expectation that once an agreement has been made, that an investment will go live in about 24 months. If after 24 months there's been no movement, we would like to annul the legal contract and then give that funding to someone else. So that's part of the process. What one can think of what is necessary for legal documentation is the ability to sign a natural person or an institution that can sign a contract. That's very important. Based on the conditions of the loan. There should also be some capacity requirement for due diligence, which is part and parcel of the work that we do. Your due diligence will be not only on the financial statements, but also on your environmental and social risks and your ability to capture the potential of this investment as a lever for sustainable change in terms of the metrics that you've chosen for your sustainability impact. Great. That brings us to the next slide. This is the calendar of the open call for proposals. As mentioned prior, we're looking at the 1st of April as the deadline for applications to be received. This is one of two timeframes in which an application can be made. This will be screened in April, May, and in June, we will have the submission to the consultative committee. So if you have been successful, we will reach out to you with further questions and comments to finalize documentation to the consultative committee. It will be reviewed by the consultative committee in July, and in August and September, it will go to the executive board for approval in October in 2024. Great. The application form. And if you haven't seen the application form, I would highly encourage you to please have a look at our website where you can find the application form, and please do read it carefully. And in case you have any questions, please reach out to us. At no stage of this application process shall we ask for any fee. So that's quite important. If someone is telling you to pay a fee, it's not us. And please let us know if that is the case. We will not be charging any fees. It's really important to provide us with a complete and accurate information in the application. And that's not only for the financial part, but also certainly for the social and environmental part as well. The application form will include your expected impact and your baseline data. And I would highly encourage prospective investees to please provide that information as well, as that will strengthen the success of your application. So in terms of correspondence on proposals, due to the lack of manpower here in the office, we're only 24 people. We're not in a position to answer every proposal in terms of a negative result. However, you will hear from us in terms of a follow through. Another part that I already mentioned is the exclusion list. The exclusion list sets out a few elements that we are not in a position to invest in, such as crops that are not necessarily that may cause a health hazard, etc., etc. And I highly encourage investees or prospective investees in this particular case to have a look on the exclusion list that is available on our website as well. You might have confidential information in your application. In that particular case, please let us know if you do not wish for us to share certain information, as information will be shared with our consultative committee and our executive board as part of our application process. So if there's particular information that you'd like for us to not share, please let us know clearly and early, and we will take that into consideration. This brings us to the organizational background, and I believe that's where Nicolas steps in.
Yeah, thank you, Zora, and good day wherever you are, also from myself. What I will do now, I will now turn to the proposal template that you find on our website in detail. So I will walk you through the template, and in fact also Zora, when it comes to impact, as you find it on the website, and now chapter by chapter. So what you see here is the headings, yeah? And we start with the headline, yeah? That's number one, organizational background. With this, we just simply would like to know how your company is registered, what legal personality that company has, and how long the company has been in business. Under 1.2, which you see there, we would like to ensure that the activities to be financed actually will be in a CFC member country, and we want to learn more about the physical location or locations of the business and also your target markets. And 1.3 is just as an introduction, try to summarize in 1 or 2 sentences what funding is sought and what's going to be used for. We move to the next slide. That would be already chapter number 2, and that's a key chapter. It deals with the type of finance that we offer. And here you are asked to indicate what type of finance you actually request. But before we do that, here you find a slide and some information about some generalities. What is required, or what is it that these things have in common? The CFC share of financing does not exceed 50% of the project or the particular investment cost. So for the specific undertaking that you are proposing, financing from other sources must be shown, in the financial projections. That usually is other loans, it's your equity or retained earnings, nothing spooky. Assets not shown in the financial statements, we cannot accept as co-financing. Usually there is a lot of question about it. My answer to this is usually you can be creative here. As long as we can see that there is something, it is agreeable. The second one is that we enter into partnership agreements. You will see that even if we only, if a loan cycle of a trade finance deal is only 12 months, we seek to provide you what we call a framework contract that would last for 3 or even 5 of those loan cycles. And we will stipulate our willingness to do so and to renew these contracts for a few years when certain conditions, covenants are met. In other words, when you behave and when our relationship is a good one. Last generality I want to discuss up front is interest rates. Now that's also a topic that is always heavily debated. The broad answer is based on an individual risk profile that we get from you when we assess you and your business. Basis for that, it's a combination of the governing borrowing rate in US dollars or euros in the country where the CFC loan will be issued. And on top of that will be a risk marker. So as a rule of thumb, these rates currently go between 5 and 12%. If we move to the next slide, you see what kind of loan types that we offer. The first one, which actually is right down, is a classic term loan. That's a classic product for capital expenditure investments. Example would be the improvement or the rehabilitation of a palm oil mill, or if you want to extend a cocoa plantation. It's between 3 to 5 years, the term. Sometimes it's longer. If you are expanding a perennial tree crop farm or whatever, and we see the necessity and reason for it, we also even give grace periods of 1 or 2 years. These are always tailored loans. Each loan that we do and structure is tailored to the necessity. Second, and actually our most popular product, is that of trade finance. That ranges from pure trade finance, which would be against shipping documents, but can extend up to the time point where the company already needs to go out and purchase raw material, until the point where actually the final buyer of a processed product pays somewhere in Europe. The standard structure of that is to finance against purchase orders, and to have a tripartite agreement with the final off-taker for direct payment to the CFC. We have a lot of experience with that, and that usually works okay. When we do have established some relationship with our investees, then we also look into the option of providing untied working capital facilities, which you can see as the third issue here, with less control over the cash, but sometimes we use CMA structures, that would be collateral management agent structures, in order to secure them. As a rule of thumb, the longer the cash conversion cycle, the more likely we will ask for other securities. That is, the longer the money is that you need to go and purchase the raw material, process it, and then from the end buyer to buy, the more securities we want. That can be a pledge on inventory, on receivables, or third-party guarantees. Examples for these trade finance working capital facilities is we had an avocado oil company from Kenya, for example, that first needs to go and buy the avocados, then it needs to process the oil, and then it needs to ship it to Europe, and then also the final off-taker, a European supermarket, also takes another 60 days to pay. Another one would be what we had, a mango puree producer from Mali. Also, it's a seasonal crop, needs to go out and purchase the raw mangoes, then needs to process them, then needs to ship them Europe. Then usually you end up in 180 days, and that's what we can provide finance. Next slide. You see that while this is in our mandate, and that's why we put it here, equity stakes, we so far have not invested into equity of single companies because it simply absorbs too much capacity if we really want to get involved as an interested equity investor. What we occasionally do is invest equity in impact investing funds, other impact investing funds, if there are interesting propositions. We do that, though, with relatively small ticket sizes. One other product that is of high strategic importance to us, you see there also, is development impact bonds. What is meant here, in simple terms, is a construct that ensures that the ultimate payer for development impact only pays if, and also only to the amount of impact that is being delivered, so afterwards. So in practice, if there's anyone here in the webinar that is representing an NGO or any other entity that has a really good proposal for a technical assistance project in the agricultural value chain sector, and you also have a sponsor that in principle would be willing to pay, but only after the impact has been delivered, then we would be really interested in becoming the party that actually pre-finances you and takes on your performance risk. We believe that this model has a future, because sponsors do no longer really want to pay out in advance against a claim of impact that then will either materialize or sometimes it will not. There's a link on the online application with an example if this was a little bit confusing. On the next slide, you see that the last financing option mentioned here is that of fast track finance. This is for proposals with a smaller ticket size of up to $300,000, which can be submitted a bit faster in our fast track procedure. Here I have to do a disclaimer. Note that in recent years the success rate of these have been minimal, especially if you are asking for grant-based fast track finance. Projects mandatorily under fast track must be highly innovative. They must be of strategic importance for the CFC and with substantial additionality. So we do this only in rare cases, and available funding for that is limited. Now we move to chapter number 3. What do we want to know here? Under number 3.1, management and ownership. We would like to have answers to key questions like, who are your shareholders? Are there any other ultimate beneficiary owners? Is the company part of a holding company, or does it have sister companies? We really want to know the context, in the legal context in which the company is acting. Is there a board? Who sits on the board and why? Who are the key persons running the company on the management side, and what do they bring to the table? Are the skills and the expertise of members of the management and also of the board, are they complementary? If to this you can attach CVs on management and other key persons, that would be very, very helpful for us. Under 3.2, current business model, we like to understand basically what your current business looks like now. This is actually where many proponents have difficulties. Now, expect that we know nothing about your company. So start really with saying, okay, this is company X, and we produce and process Y for export to country XYZ. Yeah, it's as simple as that. So we understand. And then where do you source from? What processing steps do you do? When have you been established? Where are you located? What are your target customers? Number of employees, qualification levels, sales, production volumes, capacity for production or processing, etc. Really the basics. Yeah. So the goal is that the reader, that's us, yeah, and also other Greenia like the consultative committee have a good high level understanding what you do, how you do it, and at what size level. Yeah? In many proposals, we have difficulties to interpret the business case and with whom actually we are dealing. It doesn't need to be long, but it needs to be concise. And if and when you have figures available, number of employees, volumes, whatever, put them there. Okay, next slide. This is chapter 4, market opportunity. Translated, I would do what is around your business and how does your business fit in there. Yeah, we want to know what market or industry you are in under 4.1. Is it competitive with a lot of pressure, or are you differentiated to an extent that you fill an exclusive niche with no competition? Yeah. Do you compete on price? Do you compete on quality? On both or not at all, because you have some unique selling proposition for your product. You have more than one product. Why? And what's your main revenue generator? A key information that we want to know also, which I've noted down here, is how do you currently secure your supply? Is it from smallholders? Is it from spot market or with longer term contracts to smallholders? Are you even integrated backwards? Do you have your own farms? Yeah. This is of really, really great interest to us because this is usually where the social impact lies. And this is ultimately what the CFC is working for. And then who are your main off-takers and how do you market your product? Yeah? How do you ship? What's your relationship with your off-takers? Is it long-term? Do you have off-takers for the last 5 years, or is it really spot on at arm's length? Yeah. What are the barriers of entry into your market? Yeah. For us, it's important to determine the competition that could also be there in the future. Who are your main competitors? Yeah. If you can provide the names and the sizes, even if you make a rough guess indication, that would be super. And here is also the 4.1 is also the chapter where you should put any other macro level information, market information, which would be of interest to us. Yeah, these are legal issues, environmental, political, and technological. For example, does the industry that you're in, yeah, expect any game changers in any of these issues that of interest to us? Yeah, is there going to be a law that prohibit your product or exports of products? Yeah? Is there a new technology that will enter the market soon? Under 4, no, I'm still at 4.2. Sorry.
Go ahead.
This is a chapter where we want you to express in a few sentences what makes you better than your other competitors. There you can really brag, yeah? Where do you see your strength? Is it your staff? Is it your efficiency? Is it your unique product? Are you a price leader? Do you have super customer relations? This is what we want to know. And under 4.3, it's the same. And there we don't ask you to brag, but to be honest. We will ask you the proposal, where do you see your weakest points? Yeah? Where do you see you need to do better? Try to work out any relationship to your proposal for funding here. We can take it, and we know that nobody is perfect. Okay, then we move to the next one, Zora. That would be, yeah, that is chapter on proposed operational model. So what we will ask you on a chapter 4 is how is it now? And chapter 5 is what is it going to be in the future? We want to know how you anticipate that future, how the future will look like for your business. Under 5.1, proposed business model. Since you have described how your current business runs now, we want to know how you see that business is going to look like and what are your plans with CFC funding? How will your business be after you have invested CFC money? Where will the effects be? What changes will take place? Are you going to increase capacity? Are you going to vertically integrate? Are you going to diversify your product range, expand into another country, or improve the product quality? Here is it where we want to know What are you going to use and how your business is going to look like? Same thing, customers. How will your customer base change? Will you attract new customers? Will you enter new markets with new products? Or are you just going to deepen the market that you are in, which would be the lowest risk? Yeah. Will there be any change in distribution channels? Are you going to change from informal to formal markets? Will you use different countries for export? Yeah. And one very important question also that I have here, underlined twice, what currency will you be selling in? That's very important for us. 5.3, supply, also important. Yeah. Supply side needs to be elaborated. What is it that you require to operate? Also with the investments that you have done. How will you secure an assumed higher supply requirement? Will you diversify your sourcing? Will you engage with outgrowers? Will you import? Is this associated with any risks? Yeah? How will you structure your supply? Would it be arm's length buy, or will you have long-term contracts, supply contracts? Yeah? Will you have an organized supply chain? And how is pricing functioning in the supply chain? Is it going to be local supply, or is it going to be on the world markets? 5.4, production process. How is this going to affect, or will it change? Will you have any changes in the production or the processing process? One perspective could be, do you add any additional value through adding or improving processing steps? Yeah. Will you become traceable, or will you become certified organic, CFC funding? The other aspect is, what is going to change? Yeah. Will you need more skilled staff? Are you engaging into a technology that you are not acquainted with? Will you need training? Is there a risk of failure of a technology? Do you have access to electricity? Do you need access to any other resources there? Energy is very important in that aspect. And under 5.5, under this chapter, we would like to know if you plan to apply any innovation alongside the new investments that you want to do. Yeah. Are you going to engage into blockchain certification? You want to become traceable, mentioned that. Organic. Will you start with carbon certificate trading? Will you use renewable energy? Or even, we even consider it to be innovative if you are going to be the first one that will start to grow peanuts commercially in the country where you are. Right? So you're starting to develop an industry. So before I now hand over back to Zora for the next chapter, let me summarize a bit. Generally, kindly be as concise as possible and try to underline your information with quantitative figures where you have them available for yields, production levels, and staff. That will help us to scale and to get a picture. Try to avoid fogging, yeah, and data, and do not fall for information dumping. We get a lot of proposals, and we need to rely on you that we understand your business case with as few words as possible, to be very honest. We are fully aware that no business in this world is perfect. So do not be afraid on self-highlighting your deficiencies and the possible risks that your business is exposed to. Yeah. So at the proposal stage, we need to get a clear, high-level picture on your business to see if the business itself can be sustainable. This is the basis for any development impact, which then becomes sustainable impact. Yeah. And I think that is a good handover for chapter number 6, Zora.
Back to me, the development impact. So as the impact strategy officer here at the CFC, the development impact is very important to us. It's part and parcel of the investment. So when you look at the application form that is available on our website, you will find a section that addresses the targeted impact, the innovation, and the additionality. So please be mindful that that is very important to us. If your proposal were to be successful, I will be following up on a 6-month to an annual basis to talk sustainable impact with you. How is your performance going? What can we do to improve that, etc., etc., etc. Okay. Some of you might be familiar with the Sustainable Development Goals. Others may not. So just in short, the Sustainable Development Goals are 17 goals that have been identified by the United Nations in 2015 to be concluded in 2030. And of these 17 goals, 5 goals are our core goals. That's SDG 1, no poverty, SDG 2, zero hunger, SDG 5, gender equality, 8, and economic growth, 10, I forgot that one. Apologies. And SDG 13, that's climate action. I do apologize for that. I had a moment there. Okay. As mentioned prior, the livelihoods of small farmers are very important to the work that we do. That's the real reason why we invest in SMEs. They are our lever for change, and that is part and parcel of our investment. So when applying for funding from the CFC, there's going to be a few sources of information that we need. First of all, bespoke information related to impact to your SME, but there will be additional information such as poverty line in your country, the economic distribution, etc., etc., etc. We will also be looking at the social and environmental risks, and this is a part that will be taken on board during due diligence and will be carefully checked there as well. So please do keep that in mind when applying for funding from the Common Fund for Commodities. So what one can think of is any clear evidence of positive environmental impact as an additional support factor, any environmental risks and mitigations, etc., etc., etc. Which brings me to the next page, impact indicators. As I mentioned before, we have our goals set by the Sustainable Development Goals, but the way we measure them is by using a framework called IRIS+. And this is very important for your application because we will ask you to present us with metrics or indicators that are going to be most important for your sustainable impact. What one can think of is, for example, the income generation of the producers from whom you source as your SME. One can think of climate, CO2 as well, anything of those sorts. And all of those metrics can be found in the IRIS framework. And the link is on the website, is on the slide. We will be sending you a copy of this presentation. We will also be putting this presentation on YouTube, so you can review this presentation if needed. All right. Based on this information, we seek to provide you with the tools to make you succeed in this application process. Which brings me back to the financial performance. And here I give back to my colleague, give the baton back to my colleague, Nikolaus Krummer.
Thanks.
Go ahead. Yes.
Yeah, this is then chapter 7 of the proposal, and that actually is that alongside to the narrative business case that from chapter 1 to 5 and also partly chapter 6, we would like to assess the financial strength and performance of your business. And in other words, what you have written in a narrative, we would like to see whether the numbers tell the same story, and that is chapter 7. In principle, we ask you to fill in 2 Excel sheet templates, which you can download from our website, and which I will show actually, or we will show in the next slides. One is the balance sheet, and the other one is the profit and loss statement. We require you to fill in the factual past financial figures of the last 3 years, and then the forecast for the next couple of years. We have to look at these figures in a very structured manner and grasp the general notion of them very, very quickly. Yeah? And that is why we have pre-structured these sheets, and that is why we kindly ask you not to amend the template. Rather, try to make your figures fit into the structure. And when you do that, try to ensure that we get a true and fair view. That's what the auditors would say on your financials. Yeah, it will save us a lot of work if we do not have to find out at a later stage that some figures do not really match with the audited financial statements, which will be analyzed anyhow at a later stage before we enter into a loan agreement. Again, here we know that there is hardly any business that comes with a shiny, super solid balance sheet and regular high net profits and tons of free cash. Yeah, and so in the proposal under Chapter 7.1, you have the chance of commenting on these tables and also to provide some insights and explanations on the trends that can be observed or any up or downward figure that can be explained with any extraordinary event or any else. Yeah. For projections in Chapter 7.2, please provide us with the main assumptions under which you have drafted these projections. If you project a hockey stick growth figure, we obviously need to know on what basis you do that. Please inform us on assumed prices, on the volumes of various products that you assume to sell, and so we can get a picture. Okay, it's based on that, and we can see and make up our mind whether we find it realistic and plausible. Under 7.3, we want to know your existing finance providers and what type of funding you have received and the amount. And we would also like to learn why you turn to CFC for financing. What's our additionality to you? Be it that you simply do not find additional finance, that the interest rates in the local finance sector are prohibitive, or that the suitable loan product that you're looking for is simply not available. Yeah? Please write it down. 7.4, we ask you to list the main risks that you are facing, that you have self-identified and you might face when you grow with CFC funding. Again, kindly be open and transparent. There's no business in this world which is without risks, and we know that anything related to agriculture is risky. So whatever you write there, rest assured we can take it. Yeah? So the next slide, you can see actually the template of the profit and loss statement. There should be no surprises for you. You should be able to fill in such a statement. Yeah, these line items are really standard. Also on the next slide is the balance sheet. Also, there should be no surprises in the line items here. You can see on the left side, we ask you to fill in the historical figures, then the current year with the projection of the remainder of the year, and then comes the future. That already brings us to Chapter 8. Under 8.1, you find a list of supporting documentation that is mandatory, that you need to attach to the proposal. There's audit reports, projections, impact indicators, and the company registration documents, and also an organigram with legal ownership structure. Under 8.2, you find documents that are not mandatory, but that are highly appreciated if you have them and if you can submit them. Yeah. Foremost, if you have a business plan, attach it. CVs, I mentioned it before, and if available, also environmental social impact assessment. Yeah. You might have undertaken one before in the course of securing a previous loan or obtaining a business license. Please do. And please, if you have a pitch deck or any other documentation that you consider relevant, that helps us to understand your business case better, just attach it. If in doubt, just attach it. Yeah. The next slide already we move to, that's the second final one, Chapter 9. These are some key details that we require, including physical address, website, if you have, of your company. And Chapter 10, that would be the next slide. You are requested to tick off certain affirmations. That brings us to the end of the proposal template and also towards the end of the formal presentation. You will see an email address, opencall@commonfund.org. where you can actually submit your proposal and where you can actually also air questions. And we really try to answer each and every question.
Yeah.
Thank you very much.
Great.
Zora.
Thank you, Nikolaus. I'll take it from here. People have asked a lot of interesting questions in the chat box, and some of them are for you, Nikolaus. So for example, is the interest rate the same for each and every project?
Not at all. Not at all. As I have said, it very much depends on the country, on the industry, and also on the individual assessment from us. So it can go down as low as 5%, and I think the highest rate that we have in our portfolio currently is 12%. So as a rule of thumb, primary agriculture, farming, is highly risky, and there we are forced to take a higher interest rate. If you are in an industry with a very organized value chain, if you have long-term customers, if you have your supply in order, and if you don't run a lot of price risk, then you will see us going down rapidly with our interest rates.
Great. And there's another question for you. The term loan, is it a must to pledge mortgage assets?
I wouldn't say it's a must, but it is the normal. We do work with guarantees and we look and listen to everything, and we are creative. We don't have off-the-shelf solutions. We actually look at each and every individual case. If there's a good idea for something else, we need to secure it somehow. Yeah. Then we are always there to listen.
Great. I think most of the questions have been answered by our team. Oh, there's one other question. What is the highest fund amount that we can finance?
The highest amount as a standard rule is $2 million. In exceptional cases, we do go higher.
Okay. I think most of the questions have been answered by our wonderful team who is working in the other part of the office. If you have any other questions, I would highly encourage anyone to please send an email to our open call at common-fund.org. We intend to answer every question that comes into our mailbox. Due to the high level of number of applications, we unfortunately cannot communicate about a regretful response from our side. However, if your proposal is successful to move to the next stage, you will certainly hear from us. By that, I conclude this meeting. I thank you very much. We will send you a copy of this presentation, and you will find a copy of this presentation also on YouTube. Thank you very much.
Thank you.